Hello, my name is Mike Florin. I'm the owner of Low Cost Mortgage. Today is your weekly update for the week of April 23rd, 2025. Now, we're going to talk about interest rates first, and then we're going to get into extra things that you need to know when you're selling and or financing a manufactured home. All right, now, first things first, interest rates. Interest rates were trading within a range, and I want to show you this on the little chart here. I'm going to start drawing some lines for you. Okay. In fact, let me move over a little bit. There we go. By the way, it's right here over my shoulder. I usually pull up the 1 year just so you can kind of see what we're going to talk about in relation to the past. But we're going to pull up a 3-month chart. Now, look at this range. Everything was trading within a range for just a little bit, about 3-4 weeks or so. I have to look at it to tell you exactly. We'll call it 4 weeks. Then you had the rate start to move down significantly. Do you know why that was? As we talk about, there's upward pressure, downward pressure on rates. One of the biggest pressures on rates right now is the talk about tariffs. So you see these rates start to go down, and they go down quite a bit. In fact, on government loans, we hit really low 5s for a few days, and on conventional, we were right at about 6, and you saw those in the rate update emails. If you want, go back, check it out. Now, after it came down, then it started to go up. And it went up significantly, and a lot of that is reshuffling of investors. So investors that want to leave will start selling off, and then others come in, and then you got different trade-offs, and then you've got different things happening. Doesn't really matter. It gets kind of complicated. But the biggest driving factor on pressure up and down has been the conversation on tariffs. Now, tariffs are going to be introduced, and you see some movement before. You see the rates start to come down on the T-bill. And then rates go up on the T-bill quite a bit, and that takes interest rates and that pushes them down for that week and then right back up for that next week. All of this can be associated with tariffs. Now, if you notice, rates go up, and they go up significantly. Then they kind of stabilize and start to move somewhat predictably. That's from taking the tariffs that were happening and pausing them. Now we're trading back into a range where we have last 2 days is really high on that same basic range we were at before. Today is on the low end of that same basic range that we were at before. Well, yesterday to today is about 1/4%, almost 3/8% difference in rate. Now I'm filming this in the morning of the 23rd, and rates aren't going to post for another 2-3 hours. So once they do, then I'm going to send this email out. But at the same time, we're already seeing rates now trending lower than where they were a few days ago. And this is where us on the mortgage side, we can predict what's going to happen throughout the day just by looking at the T-bill in the morning. All right, so now let's talk about manufactured homes. I used to build manufactured homes in the 90s. I was a construction foreman on a construction crew. In the early 2000s, before I sold real estate, I sold manufactured home, land home projects. Then I became a realtor, started selling real estate, sold real estate for a few years, then I went to college. Now, with that being said, I know some things about manufactured homes. And we're currently in the mortgage industry, where I own this mortgage company, and we do finance manufactured homes. Now, do I want every single one? No. Manufactured homes are a pain to finance. They're an absolute pain. So we're going to lightly cover what are the extra steps needed. Okay. First and foremost, when you're doing financing on a manufactured home, government loans are going to be the primary source. What I mean by that is FHA, VA. That's going to be your primary source of funding. Why is that? The rules are a lot easier. The credit score doesn't need to be near as high. The loan to value or the down payment doesn't need to be as much. The down payment doesn't need to be as much. So the government loans are typically going to take precedence over conventional lending when you're looking at manufactured housing. Typically, not all the time, typically. Why? Well, people with a really high credit score tend not to buy manufactured housing. People with a lower credit score tend to buy manufactured housing. That also kicks conventional kind of out of the wayside too. So you've got that one part. Credit needs to be a little bit higher usually, and typically it's a government loan. Now let's talk about rates. Rates on a manufactured home are usually 1/8 to 1/4% higher in rate. It depends on the investor, but usually 1/4 to 1/8 or so higher in rate, just because you went from single family home to manufactured home. Okay. Let's look at what's needed additionally on the property. Now, this is what gets most realtors. If you're listing a manufactured home, you need to be aware of these things so you can coach your seller. And if you're a buyer on a manufactured home, you need to be aware of these things because your buyers need to be aware. We bring it up on the lending side, but you on the real estate side need to bring it up too because they need to hear it from both ends, okay? Additional property concerns. This is going to be your big one. This is the one where sellers and buyers both need to understand or both need to know more about manufactured housing, okay? Every time a manufactured home changes hands, it needs an engineering report. The engineering report is an extra cost, $400, $500, $600. That engineering report is going to pull out any details or anything wrong with the foundation structure and anything attached to the house. So they're going to look at current codes. They're not going to look at the code of when it was built. So stick-built house, code when it was built. Manufactured home, code right now. That's a big difference. So typically, when the engineer is under the crawl space, they're looking for the tie downs. Usually the vertical blocks are just fine. The concrete, you can't change it, but the concrete was fine. The new codes are in the tie downs. So a lot of times you have to put additional wind strapping, which is your cross strapping. Sometimes you have to put new strapping going down to the anchors, to the concrete. A lot of times, the biggest offender that we see is the vapor barrier. The vapor barrier is another $600, $700, depending on what's happening. The vapor barrier, back in the 90s and the really early 2000s, when we were building a manufactured home, the vapor barrier was considered to be up above the frame. So you'd have the metal I-beams, then you'd have this piece of plastic that was between the I-beams and all the wood underneath it. Now, with that being said, that used to be the vapor barrier. That's not the vapor barrier anymore. The code changed, which means the manufactured home that's being sold has to have a new vapor barrier installed on the bottom, basically the floor of the crawl space. That is a shock to most sellers. And you as a realtor, you should know that when you're listing a manufactured home. And you as a realtor, you should know that when you have buyers buying a manufactured home, that engineering will be done and it will call out anything that's wrong with the house in relation to current code, not the code of when it was bought. Now, or manufactured, built, whatever you want to call it. Now, let's talk about additions. On a regular house, you've got a structure, a framework. It's built to UBC code, Uniform Builder Code. On a manufactured home, it's built to HUD code, Housing and Urban Development Code. Two completely different types of codes. That means that all of your attachments need to be treated extremely differently on a manufactured home. On a stick-built home, you can decide I want to add a room. You can dig it out and get the plans, of course. You're going to dig it out, pour some concrete around, create a base of support, frame out your addition, flash it in, make it so it ties into the current home, sheathe it, roof it, right? Build it. It's attached to and screwed into the current home, and that's great. Not in a manufactured home. I'm going to pop open a picture here. In this picture is an attached deck. This is the biggest offenders of attachments on a manufactured home. If you have a deck, it cannot actually be screwed into the house. It has to be self-standing on its own. But look at where I'm circling on this deck. These are vertical posts that are next to the house. Now, with these vertical posts being next to the house, if you notice, they're supporting the roof structure of that covered porch. Now, this is extremely important for listing agents and buyer's agents when you're looking at a manufactured home and your buyers love it and they love the deck, and the deck is not self-supporting and the roof cover on the deck is not self-supporting. Guess what the engineer is going to call out? They're going to call out the fact that the roof structure of the deck is not self-supporting. Your deal is dead unless you hire contractors to self-support the inside portion of that deck. Now you got other problems. We just did one where there was a roof cover and they had to cut it off. And that's what kind of spurred off this video, because I've talked about it a lot to realtors at length, but I don't understand. Sometimes some people just don't get it, or maybe they don't have the repetitions of what's going on. On a government loan, they're going to call for engineering, and on that engineering report, it's going to say, hey, this deck and or roof is attached to the home. It cannot be. It needs to be self-supportive. On top of that, then the contractors are going to come out, check it out, tell you what they can do and cost to fix. But in this particular case, it wasn't even built to any code compliance at all. Typically, when you have a deck that's attached to a house, you have a ledger board. It's a board that runs horizontally across the house, and it's screwed into the vertical supports for the home. And then the deck cover attaches itself to that ledger board, and that way the weight that's bearing down on it bears on the 2x4s or 2x6s in the home, and it sheds the weight for it to hold it there. Now, manufactured homes, I'm going to pop open a 2x4. Look at this picture, this diameter, this thickness of a 2x4. Well, that's a 2x4 for a UBC house. This is your quote-unquote 2x4 for a HUD manufactured home. It's smaller. Since the framework, and this is the framework used all over the house, it's smaller. It's actually physically smaller by about 1/2 inch in both directions. So a 2x4 is 1.5 by 3.5 inches. It's not really 2x4, it's 1.5 by 2.5 inches. Well, a 2x4 is actually more of a 1x3 in relation to manufactured homes. Now it's a 1 inch by 3 inch, and it's smaller. And also, a regular 2x4 in a stick-built home is one continuous board. In manufactured housing, they will take 3 or 4 2x4s, they will splice them together, glue them together to make one 2x4 or 1x3. So the entire premise of manufacturing for these homes are completely different. Nothing can be attached to that home. We've seen it where people will add stucco to the house, right? Stucco looks great. Might as well. People add stucco to regular houses all the time. Well, the stucco gets added to the home, and this adds to the deck part here later, right? Or the deck piece I just talked about. But people will add stucco to the house, and they add it to a regular home, and the stucco goes down, and right below that wall, there's a piece of concrete. It's the footer. So you got the footer, you've got this 2x4 that's sitting up, you have the sheathing, and they add the stucco to the side of it. Yeah, it's some extra weight, not really a big deal. Not in a manufactured home. In a manufactured home, if we take that same wall that would typically be supported by a crawl space perimeter foundation right below it, it's not. In fact, there's pieces of wood, 2x6s or 2x8s or so, that extend inside across, and the framework's about 3 feet in, 2-3 feet in. And that framework's an I-beam, so the support section's over here. So if the support section for the side of the wall is over here, and it goes up and over and then to the sidewall, once you add that stucco, it pulls down on the house and starts to break the house. That's why you cannot add stucco to a manufactured home. There's a lot more details you can get into, but you as a realtor, you do need to be aware of these things. If you have a deck and it's attached to the home, like with a ledger board on a manufactured home, no bueno. Engineer's going to tell you to change it. If that deck has a covered portion on it, no bueno. Engineer's going to tell you to remove it or fix it. That's going to cost your sellers a lot of money. If the floor of the house inside of the crawl space doesn't have a vapor barrier, white or black plastic, usually they're using white, on the ground level across the entire crawl space, most likely engineering wasn't done last time, and the engineer's going to call out for it because current code requires a vapor barrier. Now, where do you not run into this as much? Conventional. But which loan program's really hard to do financing for on a manufactured home? Conventional. Conventional also has a bigger hit to rate too for manufactured home. Most conventional outlets, they do not want to do manufactured homes because they know the HUD code is different than the UBC code. Anyways, just wanted to give you those two pieces of information. We got a little bit on rates. We got a little bit on manufactured housing. It does get a little bit more complicated than that. There are a lot more moving parts than that. But in summary, if you were to say you were going to buy a manufactured home, your additional costs on the buy side, about $1,100, $1,200 with everything that's there, plus a higher interest rate. On the conventional side, $800, $900 and a much higher rate. That's just what happens with manufactured homes. Yeah, and then of course rates. We're going to see what happens over the next few weeks. If rates get substantially better by Thursday, Friday, I'll post it as a rate update. Just a quick, reprice, better or worse. So anyways, Mike Florin, have a great day. hopefully rates are stabilized and your buyers will feel a little bit better to jump off the fence and start buying a home. Anyways, my name is Mike Florin. Have a great day. Bye.